Welcome back to Alex Lavender on YouTube. I am, of course, your host, Mark. And joining me, as always, I have Alex Lavender, a certified mortgage broker extraordinaire. And we want to know, Alex, the people want to know, what is a reverse mortgage? And if you are in retirement and you're thinking about a reverse mortgage, how does it work?
Yeah, great question. So a reverse mortgage is essentially a mortgage you don't make payments on under its standard structure. So what happens is the lender will give you the funds for the mortgage. They'll register the mortgage on title, and it's a reverse mortgage. So instead of making payments every month, the balance grows every month instead. So that's the big difference. I can get into like what some restrictions are with it as well. I mean, you have to be a certain age. Typically, you're going to have to be 55 years or older. The older you are, the more loan to value they will allow. So the more mortgage they will allow you to secure against your home as a percentage of the value. So the way that it essentially works is the balance grows and grows. And the idea is that your home value will continue to grow as well. But it's a really good tool for people that may not have the income to qualify or the credit to qualify as well, because there's really no qualification required because they're not expecting you to make payments. That's the nice thing about it.
Are there any other criteria that someone needs to have met in order to do this? Like, do you need to own your home like 100% outright, or can you own like 90% of it?
Yeah, so you don't need to own your home outright, but any mortgages that are on it need to be paid off with the reverse mortgage. So the main criteria are your age and that you have enough equity in the home to do what you're looking to do. So, if you are qualifying for $100,000 and you have a $50,000 mortgage on the home, that's fine. You're going to get $50,000 in your pocket at the end of the day.
Wow. And how does it actually work? Like, are you getting all this money up front to you, or does it come like essentially, like a reverse mortgage? Like, does it pay into your bank account every single month?
I think there are some different structures, but the main basic structure is that it would just get deposited in your bank account one time upfront when it's registered, and then you can do as you wish with the funds.
Mm. Wow, that's amazing. Super useful tool for people to consider if they are in retirement and needing access to that sort of cash.
Mhm.
So we've gone over some of the benefits of using a reverse mortgage. Obviously, getting access to that cash is a big thing. What other reasons do you see as a mortgage broker that someone would use a reverse mortgage for?
I think the main reason is that we see a lot of people using it is because they don't qualify. So maybe their credit is not good or their income is not sufficient because they're retired and on pension income. That's the biggest thing. A lot of the times, people that are going to this can't qualify or they don't want to have the payments of a mortgage. It just doesn't suit their lifestyle.
Okay. So that makes sense. Do you have to, if you're getting a reverse mortgage, do you then have to make payments back to it at some point in time?
No, because when you pass away, it gets paid off. So one thing with it is this works really good for people that aren't giving a home or gifting a home to, their children or an estate or anything like that. So it starts to get a little bit complicated, I think, when, maybe you have other family members that are thinking they're getting some sort of inheritance and maybe they find out there's a reverse mortgage on it and a bunch of the equity was gone, right? Because that's the biggest thing is it's eating into the equity in the home over time. So maybe someone who's retired, they don't have any dependents or any estate that the money is going to go to. Maybe this is a great product if they need to pull out some equity to, maybe live or do something else. It can be really beneficial in that way. But that is one thing that people do need to keep in mind is that this mortgage grows and grows. And, if you live for a long time, there's not going to be much equity left in the home when it gets sold at the end.
Right. Yeah. So a bit of a pro and a con there. What other sort of downsides, or at least things that someone should be aware about when it comes to reverse mortgages?
There is a penalty to pay it out. So it is like a term of a mortgage. So typically, I think they're on 5-year terms. And I believe the interest rates tend to be a little bit higher than a standard mortgage as well. So some people do take them and then decide to refinance them out later and get into a traditional mortgage. There are some penalties with that as well. So that is one thing to consider. And the other thing I would say to consider is even if someone doesn't have an estate or family members that are, they're going to gift or not gift, give their home to, once they pass away in their will, they also have to think about, what happens if they need to go into long-term care as well. So some people, when they go into long-term care, they sell their home and they have all this equity they've built up over the years, or no mortgage for many years, and that provides the funds they require for long-term care. If you put this reverse mortgage on and you get to an older age, you might not have that equity left in the home to have that option anymore.
Yeah, that's really important to consider. You mentioned that the interest rate's a little bit higher, but you also said that you don't have to pay anything to the reverse mortgage. So how does that interest actually build and how does it get paid?
Yeah, it doesn't get paid. The mortgage increases every month. So like for instance, if it were $100,000 mortgage and let's say the interest payments were $500 a month. So at the end of a year, that's an extra $6,000. So that means at year one, the mortgage is 106,000, then, approximately 112,000, 118,000. So the mortgage balance continues to grow and grow in lieu of payments.
Got it. That makes sense. And you also mentioned that at some point in time, if someone wanted, they could go back to a traditional mortgage. So like reversing a reverse mortgage.
Mm-hmm.
And then I guess without you would start making payments like a traditional mortgage. So that is possible, but you said there's fees with it. Is that right?
Yeah, because you'd have to pay off the reverse mortgage to obtain a new mortgage, and there are penalties and fees to pay it out early.
Okay, got it. And what are some big myths or misconceptions that you see when it comes to reverse mortgages?
Yeah, some people think like the bank owns the home, which is a common misconception, which they don't. You still fully own the home. There's a mortgage on it, which is a reverse mortgage, but they will own the home after you pass away. In theory, they'll take ownership and liquidate the property. Yeah, that's probably one of the biggest misconceptions. Another one is, it's maybe for desperate people as well. I wouldn't say it's for desperate people, but I would say it definitely does help in situations where the credit's not there, the income's not there to qualify. And, sometimes there are no other options, especially when the home's in a more rural area as well, I would say.
Yeah, that reminds me of my mother-in-law who recently retired and then realized that she had problems getting loans for normal things because she essentially, was retired and didn't have, in the eyes of the credit bureaus, they were not credit worthy anymore. So I think that's something that surprises a lot of people when they are in retirement. So this seems like a useful tool to do that. Which leads me to my final question, Alex, which is when should someone consider a reverse mortgage?
The older you are, the more money that you'll get out. I think it's a good idea. If you're considering it, I think it's a good idea to look and see how much money you'd qualify for today, because sometimes that surprises people. I think initially when you're about 55 or so, it's about 20% loan to value. And I think it grows to about 50% loan to value as you reach 80 and 85. So that's a big thing as well. I mean, you can just get the information to kind of find out. I think that's the big thing is, find out and see what your option is and then kind of go from there.
Got it. And if you are watching this video and you're curious about a reverse mortgage, you can use the link down below this video to reach out to Alex himself. He can help you walk through those steps, or you can go to alexlavender.ca.